I'm not talking about the person involved. If the person involved has committed an offense, please make well, charge him for the offense, and let him face the law. But what we're talking about is the lack of respect of the rule of law, which is one of the things in the ease of doing business. We are joking in this country. And I know that a whole lot of this has been happening. It's because now that is Emefiele, everybody is crying. But many Nigerians have also been in that position, and there has been a flagrant disrespect of laws across board. Yesterday, it was DSS and Correctional Services. Another time, it was DSS and NIA. Another time, it will be the police and army. Another time, it will be the DSS and EFCC. Come on, guys. Is this a country? Is this actually a country? For what happened yesterday, that is the man that his signature is on your currency currently. And you go out and you say, come on, guys, what do you think that foreign investors will be saying? What they will only see from that is that if I come into Nigeria to do business, and perhaps I want to enforce my rights, and the court gives me that decision, Nigerian institutions will not allow that decision to fly. Perhaps that's what they will see. But, what do I know? For me, it's from the business and the economic lens. I'm not involved in whatever politics or whatever. If anyone has committed an offense, by all means, charge him to court, let him face the law, or let whoever has committed an offense face the law. But whatever you're doing, remember, my science taught me those days that for every action, for every action, there's an equal and opposite reaction. So what you will also be looking at is that what is it that I'm doing, and what is the reaction? What could be the backlash? I don't want to go into the shenanigans of it. A lot of people have their own feelings about it, and by all means, they are free to do it. Okay, Emefiele's days, we suffered Naira redesign and all of that. Fantastic. If you have things that you are going to charge the former central bank for, governor for, please do that and let him face the law. But what I am saying is that if the vice president is currently in Europe talking about Nigeria, President Tinubu has gone to France to say we are ready to do business. He's met with Shell, he's met with everybody in the villa. I think we should just retrace our footsteps. And this is not even just about this administration. I said it at the beginning. There's been that disrespect for the rule of law. We have three arms of government: the executive, the legislature, and the judiciary. And I think every arm of government should be respected in their own turf. So I think whosoever the buck that it stops at your table now, and perhaps Mr. President, or whosoever, please take note. People are actually watching. All right, let's quickly take this. The Central Bank of Nigeria, during its fourth monetary policy meeting for 2023, has increased the monetary policy rate from 18.5% to 18.75%. The Monetary Policy Committee of the Central Bank also retained the cash reserve ratio at 2.5% and liquidity ratio at 30%. The acting governor of the Central Bank of Nigeria, Folashodun Shonubi, while addressing the press on Tuesday in Abuja, explained that the MPC decided to hike the MPR by 25 basis points in order to contain inflation. Just take a listen.
Following the outlook for the domestic economy, members were of the view that the committee was confronted with only two policy options: to hold or hike the policy rates to offset the moderate increase in headline inflation. Considering the option to hold, the committee reviewed the impact of the continued rise in inflation on various macroeconomic variables, noting the potential dampening effect on output growth. Members agreed unanimously that the previous series of rate hikes had indeed greatly moderated the pace of price increases. The option to continue to hike the policy rate, albeit moderately, also presented a strong alternative. This is premised on the expected liquidity injections into the economy from the recent policy developments and the likely impact on inflation. The committee remained cautious in arriving at a policy decision as members noted the need to continue to support investment, which will ultimately lead to the recovery of output growth. The balance of these arguments thus leaned in favor of a moderate rate hike to sustain efforts at anchoring inflation expectation, narrow the negative real interest rate gap, and improve investor confidence. The MPC thus resolved by majority to raise the monetary policy rate. 6 members voted to raise the monetary policy rate, 4 by 25 basis points, 2 by 50 basis points. 5 members voted to hold the monetary policy rate constant. All members voted to narrow the asymmetric corridor from plus 100 to minus 700 basis points at a new level of plus 100 and minus 300 basis points around the MPR. In summary, the MPR voted to raise the policy rate by 25 basis points from 18.5 to 18.75%, adjust the asymmetric corridor to plus 100 minus 300 basis points around the MPR, retain the CRR at 32.5%, and retain the liquidity ratio at 30%. Thank you very much.
All right, welcome back to the program. Joining me right now is Dr. Hassan Mahmood, who is the Director of Monetary Policy Department at the Central Bank of Nigeria. Earlier on, I did mention that the Central Bank's MPC did meet yesterday. Yesterday and Monday, actually, for the July meeting. That meeting happens 6 times a year. I've said it times without number on the show, but in case you're hearing it again, it's 6 times a year. The next meeting will be in September. Dr. Hassan Mahmood, welcome to the program.
Good morning.
Good morning.
Nice to be here.
Likewise, nice to have you. What really happened yesterday at the MPC, the decisions? It seems what I can read. Let me tell you what I can read, or what I've read.
Yes.
I don't know if it was deliberate from the MPC's part to have that meeting in the evening. That's the first of it in many years that at least I've been on this beat. And I was like, okay, whether it's intentional, the market would have closed, but it's for you to respond. Then secondly, the mixed signal that this MPC is given, and the mixed signal in the area of, it seems that when this administration came in, that Central Bank of Nigeria is trying to be a little bit lax in terms of taking an accommodative stance, in terms of, okay, the liberalization of FX. For example, just before I came in also, I saw that the post-note debits on NairaBet, Abuki FX, and some other companies have been lifted by the central bank giving to their banks to inform their clients. So some kind of accommodative stance. But yesterday, 18.75% interest rate increase for a country that is strangulated right now by a 2.35% growth in the first quarter of 2023, by 22.79% inflation rate, by the cost of living crisis that we have right now, occasioned by the removal of fuel subsidy. So please just speak to me about these readings of mine.
Thank you. For the first one on the timing of the press conference, your guess is right. Yeah.
So my guess is right.
It's very right, very correct. And it was the management that felt it should go that way so that we don't have some noise in the market before then. Because, you know, there are anticipation on what will CBN do, what will be the policy reactions to what is going on. So that was what informed that. And I think going forward, that will be the style. Now, on the issues you raised and what informed the monetary policy decision, there are various sides to the equation. And we always say that the primary mandate of central bank and the Monetary Policy Committee is to ensure price stability, by extension, financial system stability too. What was before the MPC members were, you know, a barrage of issues, both from the global and the domestic scene. But let's leave the global first. Let's concentrate on the domestic scene. On the domestic space, like you mentioned, inflation was 22.79. GDP also went down quarter on quarter for the first quarter of 2023. What we're looking at is the liquidity in the system. And we saw that the build-up in the liquidity was quite phenomenal over this period. 3 or 4 factors are playing out there. The liberalization of exchange rate, like you rightly mentioned, was something that is seeing, you know, depreciation at the FX market now. You know, the acting governor told us not to call it INE again because it's not only for importers and exporters. Everybody can play in that space. The depreciation that was seen there is just a process for the market to discover its long-run equilibrium space. It is not unexpected. The bank is not just saying that as a shock. The bank is saying that as a process that we think will happen. And we have instruments and procedures in place to come in when it is necessary to come in. We're also monitoring the behavior of operators in that market in terms of the price discovery potentials of that market, because we said it's market-driven, but that does not mean that the central bank will just sit and the market will go anywhere it wants. We have, like the acting governor also said, we have what we're looking at as a long-run equilibrium, you know, state. And as we are overshooting or undershooting that space, central bank will play its own role. On the decision to raise the MPR by 25 basis points, and from the vote, you will see that it was quite a kind of a balance. Yes. 5 members were for hold. And the reasons for those that felt we should hold was, one, the economy is already overheated, just like the points that you raised, poverty level, unemployment level, cost of government borrowing is also going up.
But those arguments are valid.
They're valid. But here the other people's side too.
Yeah.
Those that are asked too tight. So that's why I started with that one. Then those that now wanted for tightening, we're also looking at, they looked at these factors that the hold people are also, the hold members were advocating. But the other critical issues that were coming up, and they were very significant, was the fact that injections are coming in from palliative, $500 billion. We don't know how the World Bank $800 million will also play out. Even from the gains, FX gain, from what will go to FAC, has also increased. So that means another pumping in of liquidity will come in. the pass-through from the exchange rate depreciation was also going to hit inflation. So a lot of injections are coming in. We're already experiencing liquidity surfeits in the system. You see the OBB rates and treasury rates in the market are all going down, while the MPR is way up there. So the point is, if you are seeing these injections coming in, where will you now hold? Because hold, yes, it's not losing, we are still in a tightened mode, but it will mean that you are not giving the signal to the domestic economy and the rest of the world that you have reversed your tightening mode. It's just like what happened in the United States. The United States held, but said that we are going to tighten further if things do not balance up. There the inflation number is going down already. The last one they had was 100 basis points. But, the base effect played out there, but that is not still the important thing. What was critical was that inflation numbers are going down, growth is improving. Okay,
so with this, sorry to cut you short, this is just coming to me now. With this rate upward adjustment that you're doing, and yet we are not seeing inflation go down, I understand, because the reasons have been given even in previous MPC meetings that if we had not even been tightening, inflation rates would have been more than that.
Thank you.
I understand. So don't give me that, Dr. Mahmood.
Yes.
What I am actually now asking is that even with this, money supply is still up. As at June, the total money supply, I think about 64 trillion naira, if I'm not mistaken. For June alone, I think it was about 2.9 trillion naira. So if you say that you are chasing money supply, where in a country purchasing power is down, where in a country people don't even have the naira now to spend, as it were. So where is the economic sense there? Don't you think that Nigeria's inflation fighting is away now from the economics textbooks that you people have been studying, or you studied, because I know you're even a doctor, so please explain.
Yeah, I will start from where you mentioned the income level and poverty and disposable income. That is why inflation is even more critical. Because even if your earning is going up and inflation is going up commensurately, you are zero. You are still on the same platform. But even if your earning is the same and inflation is going down, then your propensity to spend, they call it marginal propensity to spend, will improve, because the real disposable income will have increased. So the inflation that we're fighting is even more critical for the low income.
Now the question is that the inflation you people are fighting, what's the source of the inflation?
Yes, thank you very much. Two sides of the equation. The structural side, which you know very much about, all those other issues that are outside the purview of the central bank, and then the monetary side. And these things we're doing is we've come to the realization that central bank cannot solve the entire problems of the country. And you will see that in that communique, the acting governor was emphasizing collaboration between fiscal and monetary authorities. It is the period of where you see central bank, being counter-fiscal is gone. At this era, we need to sit down together, plan the medium-term expenditure profile with the government, even though central bank is commissioned to that. If government spending are coming, there was also a suggestion that there should be a very close bilateral relationship between the fiscal and monetary, so that we have a proper coordination of this. And that's why I said these injections are coming in. They are necessary injections. We cannot say because of inflation, no, government don't give palliative. No, those palliatives will come, but we'll plan how those will not become a monetary phenomenon that will drive inflationary pressure. Because if you give people money, and there's not, the things to buy did not change, which will not even change in the short run. Because if you give money today, that money will hit your account today. But the production of rice in Wuse market will not improve today.
No, Doctor,
it will take time to improve. So, wait, let me finish. Yes. So that I wanted to learn, sorry.
Yes, okay.
So the point is, because that liquidity that will come in, those funds that will come in, that will come and meet that stable or that constant supply state, will become inflationary. That's what we call demand pool. So everybody has money, goes to the market, they have only maybe 5 farmers that brought yam to the market. Everybody wants to buy. The price will be going up.
Why did the 5 people only bring yam to the market? That was the question I wanted to ask.
Okay, yes, that was because it was that day. By the second, third day, as people see that the prices are going up, they'll start rushing into the market. And that's when So you see, maybe the farmers are coming from Garki or Nyanya, or by the time it starts moving up, Lokoja will come in, Oshun will come in, Mina will come in. You know, you start going to where, so the demand drives the supply that comes to that space. But what I'm emphasizing is that the production process to increase that rice, it's not a day. You have to plant and everything.
Yes, and the production process is not CBN's job.
It's not.
Fantastic.
So your question was the drivers
that the inflation,
of inflation.
Yes, that the inflation we're seeing in Nigeria, because we've been fighting it now for about a year or so, since May 2022.
Since Central Bank started,
since May 2022, you've had that upward adjustment of rates. So what history in the last 1 year has taught us now is that inflation in Nigeria may not be a monetary phenomenon. It could be more of structural phenomenon that the central bank has no purview.
Yes.
President Tinubu declared a state of emergency on food.
Yes.
Which I suppose that perhaps insecurity and all of that should be what they are looking at. If insecurity is attended to promptly, you might begin to see that instead of having 5 farmers now bring their products to the market, more farmers will have confidence to go back to the production, to the farm, produce more food. When you have so much supply, price definitely will drop. So, do you see, because I'm just thinking what the rationale is behind all of this in the last 1 year and a half, and it's still not going down. And if it's not going down, what will now happen for the central bank's MPC? What will break the central bank's MPC to stay hold? Like we've also been seeing the Reserve Bank of South Africa just a few days ago muted its own rates.
US is doing today, so we'll see what they will do.
Yes.
Yeah. Now, we are aware of the fact that inflation, particularly the food side, are structural phenomenon. They are driven by factors that are, and if you look at even the component of the inflation, food inflation is also rising. And food in the CPI basket is taking over 50%. So whatever happened in that space is important. But it's not necessarily the price of the food items itself that is rising, but the cost of bringing those food items to those that will eat them. Transportation cost is building up. The cost of using silos or storages is also building up. The security challenges in those places, so people are not able to go to the farms. Those are the structural issues we are mentioning. But if you remember, Nancy, after COVID, or during COVID, billions, trillions of naira, when Nigeria did over 7 trillion into the economy to support people that were not able to produce or do their businesses. This was a global phenomenon. And that post-COVID now made many economies to have what we call demand pull inflation. The monetary phenomenon was phenomenal at this time. The monetary component of it was, of the drivers of inflation, was big. So what was important was tighten to bring, because the tightening they were doing was actually to even reduce credit, to reduce aggregate demand, the ability of people to buy. That was what they were doing. So what that means is that because the supply is not meeting up with the demand, so prices are going up. But if you want the disposable income you mentioned to be in real terms positive, then inflation must go down significantly.
So that your naira can buy more.
The same thing happens at the FX window. So what drove this increase was the fact that those built up, and that's what we call pent-up demand, all those built up will need to be cleared. They can only be cleared not in the immediate term, but short to medium term, because like you mentioned, supply will now start picking up. That is if there are no security challenges, that is if infrastructure has improved, that is if PMS prices are not going up, so much that you also get that feeding into the cost of transportation. Then those other things will have to play out such that you see the supply hitting the market and demand is going up. You see most of the economies we have, if you see smaller economies that have, less population than Nigeria, you see their per capita income, GDP is like $5,000-7,000 per individual. Nigeria, we are less than 2,000.
Yes.
So is the proportion of the population as against the GDP numbers we have, or the GDP in terms of income level. So addressing the monetary side of the inflation that's what is within the purview of the central bank. And the acting governor in the communique also mentioned that there are other liquidity management tools and instruments that central bank will need to deploy.
Do you still have them?
We have OMO. OMO is there.
Because why I asked that question is because it seems that some of the tools that the CBN has been deploying,
we've not been very active on OMO for a while. Now those tools will be triggered and launched. There's a need to manage, because number one, the excess liquidity in the system is one, the ability of the banks to lend to some other sectors that are challenged by this structural factor is also limited. So you want banks to go into agriculture, to go into other mining. Meanwhile, those that are doing the mining are artisanal miners. They don't have address. They don't have how you can track your funding. Don't forget, the banks are also holding shareholders' funds. They are accountable to those people. So there's a limit to how much the central bank can push banks to go on. It's a private business.
Now,
and that was what prompted our interventions.
Now that you've brought me to the banks, the CRR was still kept at 2.5%. Yes. In some other climes, we've seen the CRRs of those countries lower. Yeah. The MPC has maintained the CRR now for close to, I think, the last 3 MPCs, if I'm not mistaken. The CRR at 2.5%. What it means, let me just explain to our viewers, is that for every 100,000 naira perhaps a bank has to deposit 32,500 naira with the central bank. That's what just the cash reserve ratio means. Earlier, some weeks ago, or was it 2 weeks ago or so, the CBN also lowered CRR for the merchant banks. Yes. So I was assuming that I would see a lowering of the CRR yesterday for commercial banks. Why did this happen? Why wasn't it reduced? If
we lowered CRR in the face of liquidity surfeit, that would be counterintuitive.
Okay, so
in the sense that you are leaving more money. Yes,
leaving more money.
Yes, banks are still struggling to meet the LDR, the loan deposit. Yes, they are still struggling to meet that 65%. So if you now pump in more, and the reason for that is not just because the bank's lending has declined substantially, but the numerator of that equation has increased substantially. You know, the total qualifying capital has increased substantially. So, and the denominator may be the same or even lower. So you see the proportion of credit that the banks are supposed to give will have increased significantly in that space. But if you look at the space... Shouldn't the banks
give credit even at this
time?
They're giving. For an economy, shouldn't the banks have more money to give out to businesses for an economy that is struggling with a growth of 2.3%? And my next question also, with what your response would be, in that room on Monday and Tuesday, where recession fears, were they echoed? Because this is a country that is battling with 2.35%. I don't know what the Q2 GDP will look like. The Q2, that's from April to June. To June, April, what the MBS will bring out, that would also show the reactions of this PMS fuel subsidy and all of that, and perhaps for the rest of the year. So I don't know if recession fears, concerns actually surfaced in that room yesterday. I'm not even talking perhaps for the mid-term.
Yeah. One, the first part of your question, the main reason why we're having liquidity surfeit is that the volume of credit that's supposed to go out by the banks. Banks' main job is financial intermediation, creating money. Creating money means giving out loans. And if you see the banks are not able to give out those loans, those money stays. You remember there was a time that when we have this outstanding lending and standing deposit facilities, we had 0 premium on SDF. Our bank was still dumping money there. We won't pay you anything. Central bank will not pay anything, but banks were still bringing money to SDF because the channels of creating those credits are limited. And banks need to also build that expertise, manpower, and also our own is to give moral suasion for banks to go into these areas. Our interventions that we did in terms of the real sectors were still within this because we know food, like you mentioned, is driving inflation. But if you cannot get those supplies to come in, then Central Bank will not be able to achieve its own goal. But those quasi-fiscal activities, at least we've done enough now. And private investors and others have also come into that space through the loans that the bank gave. So we expect that to build up over time, but it takes time. The second part of the question was that the concern about growth was there. uncertainty, the wheel for July for IMF came out yesterday.
Yes.
Yeah, they revised global output growth upwards.
I was surprised.
That's a good sign.
Amid the global inflation, when I was watching that yesterday.
The US, industrial activities are picking up, and so we see inflation in advanced economies is tapering down significantly. Our own is going up, but still less than 50 basis points. So it's still something we need to address, and that is why I said those that voted for tightening. I also emphasize that there's the need to mop up this liquidity until new channels of credit lines are created. We're also trying to narrow the gap. One thing I also want to emphasize is that MPR is not a transaction rate. MPR is supposed to be a signaling rate. Even though we've seen some anomalies where you see, OBB rate far below the lower bound of the MPR, which is not supposed to be the case, but it's also a sign of liquidity surface within the system. So the bank needs to take out this, sterilize it within the central bank, so that what is within the system is not, more than our monetary our monetary policy framework is monetary targeting. We have not gone to inflation targeting or exchange rate targeting yet. But so we're looking at the monetary base in terms of the volume of money within the economy will determine the prices of goods and services.
Okay. Final question, because we have to go, and I don't know why we have to go now, but we have to go now because I have another guest.
Yeah, that's fine.
The question is, it seems that also what the central bank's MPC is trying to do is to encourage foreign investors, like what the acting governor said yesterday, in terms of encouraging foreign investment as well as narrowing the negative real returns. Why only foreign investment when local investment is also being strangulated?
Narrowing.
I understand what you're doing. Let it be juicy. Your rates in Nigeria are juicy. Pull out money from where we are. Let's come to Nigeria. Yeah. But those are also foreign portfolio investors, as it were, that when the situation is not comfortable, they carry it and go.
Yeah. The emphasis now is, and it's in the communique we also made, concerns around deglobalization, the phasing out of unilateralism within the global space. Economies are coming into smaller silos now and doing their thing in their own way. We don't want to call it trade restrictions or tariff barriers, but that is what the United States is doing. Advanced economies are doing it. We also need to be looking inwards and seeing how because if you look at some of the shocks that are happening to Nigeria today, more than 50% of what is determining how we take our monetary and fiscal policies are exogenous, are external shocks. Russian war increased the prices of cereal. COVID-19 brought lockdown. COVID-19 did not start in Nigeria. Neither did we participate in the Russian-Ukraine war, but they have impact on our economy. The Fed is increasing rates, impact on capital flow reverse and all that. So your ability to be resilient to those shocks depends on the strength of your economy. If you are not competitive enough to withstand those shocks, then try to close your space so that those shocks don't hit you. So instead of depending extensively on importation, try to produce these things locally, because even in our inflation numbers, there's imported inflation component for some finished goods. So it is important that you look inwards, produce what you can produce, and that was what informed our 41 items policy. Produce what you can produce internally, shield yourself, build yourself to a competitive level that you can now go to the global space and start doing the competition there. So narrowing that was also to improve domestic savings mobilization, because as you narrow that space, the difference between your MPR and inflation, it's even more important for domestic investors than even external looks at several other things.
Because it's now liquidity and all of that things. Minus 18.75.
Yes, so about 400 or so basis point. Yes,
okay,
which is
Dr.
large.
Mahmood, we'll continue this conversation. Let there be a part 2 of this, because I'm not satisfied. I've not really...
You still want more?
Yes, I'm not satisfied with...
the issues are really...
Yes, the issues are many.
Yes,
so we'll do a part 2.
Yes.
Thank you very much for coming.
Thank you very much for having me.
All right, I've been speaking with Dr. Hassan Mahmood, who is the Director of Monetary Policy Department at the Central Bank of Nigeria. Let's quickly take a break to bring in my next guest, Mr. Samuel Agbeluyi, who is the President CITN. CITN is the Chartered Institute of Taxation of Nigeria. We'll be looking at tax reforms in Nigeria, especially now that the President has a task force, a presidential committee on tax, or, But anyway, we'll be talking about that when we come back from the break. Don't go away.
The global economy continues to gradually recover from the pandemic and Russia's invasion of Ukraine, but it is not yet out of the woods. The COVID-19 health crisis is officially over. Supply chain disruptions have returned to pre-pandemic levels. Economic activity in the first quarter of the year proved resilient, and labor markets are quite tight in many places. Energy and food prices have come down faster than expected from their war-induced peaks. And financial instability following the March banking turmoil remains contained thanks to forceful actions by the US and Swiss authorities. Under our baseline forecast, growth will slow down slightly less than projected from 3.5% last year to 3% this year, a 0.2 percentage point upward revision for 2023. The slowdown is especially concentrated in advanced economies, where growth will fall from 2.7% last year to 1.5% this year. By contrast, growth in emerging markets and developing economies will remain stable at 4% this year and 4.1% next year. Now, this masks significant differences between countries and regions, with emerging and developing Asia growing strongly at 5.3% this year, while many commodity producers will suffer from a decline in export revenues. At the same time, global inflation is projected to decline slightly faster than projected in April, from 8.7% last year to 6.8% this year, a 0.2 percentage point downward revision. Now, stronger growth and lower inflation than expected are welcome news, suggesting the global economy is headed in the right direction. Yet growth remains low by historical standards, and while some adverse risks have moderated, the balance remains tilted to the downside, and it is too early to celebrate.
All right, as you can see there, my guest is already seated, the president of the CITN, Chartered Institute of Taxation of Nigeria, CITN, President Samuel Agbeluyi. So congratulations, I must say, congratulations. Now let's get started. Let's get started from where I ended the last session. The president has set up a tax force, a presidential committee on tax. What do you think about that? What is CITN's position on that? What would you like that committee to come up with?
Thank you very much. Let me start by saying that the President Bola Tinubu has started on a good note, economic-wise. That's generally. And bringing it home to taxation, the step he took in getting a committee to reform the tax system is a commendable one. And we also applaud him for the personality he has chosen to lead that team. Now, it won't surprise you, but it will surprise some people that there are some states in this country where we have as many as 58 different types of taxes. That is a call for anarchy, and no economy can grow under that condition. So I guess he actually gave us hint that he was going along that path during the swearing when he talked about eradicating multiplication of taxes. Yes. So everything is still in sync. We applaud that, and we expect a lot to come out of that. We can't continue to have this unwieldy number of taxes, whereby there is no certainty, there is no economy of tax collection, and nobody is benefiting. Some of the taxes are not bringing anything significant to the purse of the government, but they bring burden. So the moment you don't have certainty in any economic activities, particularly taxation, it tells nobody. So we expect the committee to sanitize, harmonize the various type of taxes.
Okay. Now, there's also been in the news, and I know you might have seen it, that there are talks around merging FIRS, NIMASA, and what's the other agency again? Customs. You know, though they are also conflicting news in terms of the government denying it. No, we didn't say that. But what do you think? Because I've also read a few pieces that Customs, for example, NIMASA, for example, should not be merged with the FIRS. What do you think about that as Nigeria Revenue Agency?
That's a tough call. I know almost all the countries in Africa I've been to, and I've been to quite a number. You have the fusion of custom and the revenue agency. Even in UK,
that's what I wanted to say.
Yes, that is what
His Majesty's Revenue and Customs.
Exactly.
Yeah.
So, but and I know it's not starting. That discussion it didn't just start under this administration, but every environment has its peculiarity, and it will take a lot of guts to get that done. But speaking generally, taxation or revenue requires certainty, requires harmony. Because nobody pays tax smiling. It's just that it is a compulsory and necessary thing that you need to do. So if you must do it, can you make it convenient, simple, and reasonable for the taxpayer? Because it is not, it affects their bottom line. So if there's sanity, if there's harmony, we plead for that. And we also need to consider the federal structure of the country. In some countries, just one revenue agency handles everything. So you don't have FRS collecting company income tax, state internal revenue collecting personal income tax. Now, by virtue of our federal structure, that is not possible in this country. But as far as you can harmonize, the better for the system. And not just custom, not just NIMASA. There are even some other agencies of government that are meddling with tax administration in the country. President Buhari tried to solve that problem. But I tell you, as a practitioner, it's not been totally solved.
What do you see are the challenges and solutions to tax generation and tax collection? Because tax generation and collection mean two things. A revenue agency, in case of, for example, FIRS may say, okay, we've generated, let's say, 5 trillion naira. But when you go to collect, it could be 3 trillion naira that you collect. So there's a difference between tax collection and generation. So how do you address the challenges there? And what are your recommendations? Then secondly, the tax morale of Nigerians. You said earlier on about like 58 taxes, if we put them together. What will it take to get the tax morale of Nigerians up? Especially with a president now that has given us a signal that I want to eradicate multiplication of taxes, but I also do need revenue to work.
Well, thank you. My answer to the two questions will be the same. The same in the sense that he has taken the first step, and it's a bold step, and it's what we like. We are waiting for the outcome. That is to harmonize and streamline the taxes you want to collect. Also, let's not forget that taxation is an offshoot, is a function of economic activities. So the country must be in a stable manner before the economy can thrive. Once you have a thriving economy, then of course tax revenue will come on board. But much more important is that the moral part of this issue, there should be tax justice. The social contract is important. The gap, the confidence of the people, the trust people have in government as dwindled over the years. So this government needs to build that confidence back. Yeah, and how do you build the confidence? We need to put end to this prodigality of spending, the opulence, the affluence we have in government. You can't collect money from people who are struggling to make their business to stay afloat. And what we see and what we hear every now and then is fraud cases everywhere. Nobody will trust you with his money. So you need to build the confidence of the people that you can be trusted with whatever is given to you. Once that is done, there are other issues that are just a kind of derivative of the first. You build the confidence, you streamline the tax, the different type of taxes. Then we need to put an end to having our database in silos, because for you to do you need enumeration before you can collect taxes. If that is not done, then of course you go nowhere. And to do your enumeration, because of the benefit of technology, can we also bring together our various database, not one with FRS, one with police, one with identity management board, and another one with the banks. So we need to harmonize. When we have the database of everybody, it is easy to trace the income. And of course, the job of the Federal Inland Revenue Service will be easier, and more money will come into the purse of the government.
Okay, let me ask you 3 questions because I'm looking at our time. First and foremost, it's been said, at least in the last few years, that the government should try to get a way to widen the tax base, not necessarily increase taxes, getting the informal sector to pay taxes. Do you think that the Matan idea of the VAT Direct initiative with FIRS is a good one? That's the first one. Then secondly, FIRS just came out a few days ago to say that they generated erecting 5.5 trillion naira between January and June this year, which is a record, but we saw 10 trillion naira generated in 2022 as revenue. What do you think about that? Do you see the FIRS having the capacity to do more? Then the third question is around VAT. I think in 2021, was it in 2021, the tussle that we saw between the federal government and states, for example, Lagos and Rivers State, in the sense that, oh, don't collect my VAT for me, let me collect, and all of that. What do you think about these 3 issues as we close? I
will first of all say everything, we talk of the tripod in taxation. You start with the economics, you move to law, then you move into accounting. The tripod must be good, but essentially the economy activities must be great. And when you talk of the food sufficiency the president talked about recently, I know he has security in his mind, because no farmer will go anywhere once their safety is not guaranteed. That security is important to every aspect of the economy, not just in the north or in the east, everywhere in the country. So let the business thrive. Then, of course, they'll be there for you to pay whatever they need to pay. Now, on the issue of 5.5, I expect them to follow the direction and do better than they did last year. Because I tell you, there are a lot of great people in FRS. So all they need is the political will. And this government needs to pay more attention to the tax expenditure. That is the waiver that is given. If you are giving about 2 trillion, 4 trillion.
You're talking of like the tax credit waivers that we've been saying. There's the road tax credit.
No, that's even different.
Which one are you talking
for the
about?
tax credit.
Okay.
For the tax credit, there's a road for you or an infrastructure for you to construct. And Dagote has done very well in that regard. But waiver in terms of pioneer status, whereby companies that are existing in businesses that are not new, that are not novel, that are still getting this waiver, we need to cut down on that so that, of course, more money will come into the purse of the government. Okay.
The Matan issue, the VAT Direct initiative, informal sector.
You see, and I've listened to the special advisor to the president on revenue matter. You can only tax prosperity. You can't tax poverty. So the benchmark must be clearly set. Even under President Buhari, the then Minister of Finance, through the instrumentality of Finance Act, said a company within the range of 25 million below, please, can you excuse them? They need to thrive. And all we need to do is to pamper them and make them good. Once they are good, subsequently they move from 25 million to 100 million and above, and they'll be there for you to pay their taxes. So I think nurture them, create the kind of taxpayer you want, give them the space, and of course, they'll be there for you to pay the necessary taxes.
Okay, I don't know if you answered the questions on states.
The state,
it's a difficult one.
It's not difficult. We have federalism on one hand, and you have the ability. When the matter was decided in Rivers State, I think Federal High Court, Rivers State, I wonder how many states have the infrastructure to collect VAT in the country. And VAT being a transnational tax, it cut across jurisdictions across the country. It could start from Lagos, end in Jigawa. So how do you trace? It's a multi-layer activity tax thing that it may be better for Federal Inland Revenue to handle on behalf of the whole Federation.
Okay. I'm being tempted to ask this question because when I did an educational video around MATAN and what the VAT Direct Initiative means, a lot of people were asking me the question as to how does government know I make 25 million, for example? You know, because if you make below 25 million, of course you are exempted. The question was how do they determine the threshold? How do they even know I'm making less than 25 million?
Well, there are ways of knowing this, and that's why I talked earlier about technology. Even at personal income tax level, we can determine your activities or your income by providing you. We provide you, look at your activities. Accounts. Yes, and BVN is going to do a lot in this country shortly. Okay.
Thank you, President, for coming.
Thank you very much.
I know we also have a part 2.
Thank you very much.
Thank you very much. All right, I've been speaking with Samuel Agbeluyi, who is the President, Chartered Institute of Taxation of Nigeria, CIT, and we've been looking at some of the sticky issues really around tax reforms in Nigeria. Thank you all for being a part of the show today. Be the best you can be and be the change that you want to see. I am Nancy Naji. Bye for now.